It's 10 a.m. right here in Lagos, Nigeria. Great to have you join us on our Business Morning. I'm Ladi Williams. First off, let's take a look at what's in the news. We see oil prices rose more than 1% today, near 7-year highs hit in the previous session, while supply concerns and political tensions in Eastern Europe and Middle East put prices on track for their biggest monthly gain in almost a year. Brent crude rose $1.07 to $91.10 a barrel after adding 69 cents on Friday. The front-month contract for March deliveries expires later in the day. The most active Brent contract for April delivery was trading at $89.51 a barrel, up 99 cents, 1.1%. U.S. West Texas Intermediate crude added $1.07 to $87.89 a barrel, having gained 21 cents on Friday. The benchmarks recorded their highest level since October 2014 on Friday at $91.70 and $88.84 respectively, and their sixth straight weekly gain. They were headed for about 17% gains this month. That's the most since February 2021. And back here, the Central Bank of Nigeria has announced a downward review of charges and rates on ATM withdrawals and interbank transfer fees for electronic banking transactions. According to the CBN, the standing order change for interbank transactions will be free and will no longer carry the charges of the 300 naira as contained in the 2017 guideline. Electronic funds transfer has also been reviewed downwards to 10 naira for transactions below 5,000 naira and 26 naira for transactions above 5,000 to 50,000 naira, while transaction above 50,000 naira will be charged 50 naira. Similarly, withdrawals on other banks, ATMs have been reduced from 65 naira to 35 naira after the third withdrawal within the same month. And one of the largest cryptocurrency exchanges in the world, Binance, has given reasons for restricting accounts of 281 Nigerian users. In a letter, the company's chief executive officer, Champagne Zhao, said 38% of the affected accounts were restricted at the request of international law enforcement. There had been complaints on social media by multiple users of the Binance global exchange. Some of the Nigerian users lamented that they could not access their accounts without any reason given by the exchange. Wednesday, hashtag Binance Stop Scamming was the third trending topic on Nigerian Twitter with over 25,000 tweets. The trend also continued on Thursday with over 10,000 tweets. In response, titled "A Letter from Our CEO to Nigerians," the CEO said that the commitments to user protection Zhao hinted that some of the accounts were restricted to prevent fraudulent activities. And after the break, we'll look at happenings in the energy sector and look at some investment opportunities as well as divestments going on in that sector. That's the moment. Do stay with us. Welcome back. Now to our first conversation. Well, we see a lot's going on in the energy sector globally, from shifting to cleaner energy, rising costs of energy usage amongst others. Back here, the Nigerian National Petroleum Corporation Limited has announced that it is working with the African Export-Import Bank, that's the Frexim Bank, to raise a sum of $5 billion. Now, to get insights and the possibilities with this investment and other matters in Nigeria's oil and gas sector, we have Dr. Ayodele Oni, energy partner at Bloomfield Law Practice. Great to have you on the program. Good morning.
Good morning. Thank you very much for having me.
Yeah, so, looking at this investment, $5 billion, what do you think would be the impact, despite the ongoing deregulation of the Nigerian oil sector?
Okay, I think it would be an opportunity for the NNPC Limited to go out there and be competitive. Like what you have with Start Oil, what you have with Petrobras, Aramco, and a number of national oil companies. It may also be useful when it comes to issues such as cash obligations, ability for the NNPC to fulfill its cash call obligation. What you previously had was a situation where everyone had a cash call obligation, and every now and then the NNPC would ask that its joint venture partners lent it money to be able to fulfill its its obligation at that time. You understand? Or ask that it be carried so that at that point they won't be able to fulfill its cash call obligation because it had to always go cap in hand to the federal government. But that's changing. You know, some of the incidents of incorporation as a limited liability company means the NNPC can then borrow money as a company, and issues such as the federation account issues and a number of those reduce. You understand, and it can be more competitive. It can do a portfolio rationing and buy new assets. It can exploit some of its assets, expend cash on some of its assets to be able to even generate more money. You know, they say you usually spend money to get more money.
To make
so
money.
it should make the NNPC more competitive.
Yeah, but you know, talking about spending money, a lot of dollars have been spent in the past. How do you expect this would make a difference? This particular investment.
Okay, I would explain to you how it would make a difference. Remember, in the past, when the NNPC spent money and generated revenue, that revenue went into the federation account, and then it meant that if NNPC needed more money, they had to go back to the federal government. And if you remember 2002, I think, where there was the Supreme Court decision, the AG Federation and AG of the state, I believe, line of cases. You know, at that time, you had under the budget, you had the federal government, state, local, and you had cash calls as a line item under the budget. But after that Supreme Court decision, cash calls were no longer a line item. After the federal, state, and local government had shared revenue, if NNPC needed money, NNPC had to go back capping and to the federal government, even despite the competing needs of the federal government. So it made it difficult for the NNPC to be able to expend enough money into exploration, development of its assets. You would always have to borrow money, usually at even high interest rates, or have other joint venture partners carry the NNPC. Now, I speak to joint venture arrangements because, of course, under the oil and gas regime in Nigeria, we've got production sharing contracts, we've got joint ventures, we've got a number of a few concessions too. You understand, an hybrid system. But majority of the hydrocarbons produced at the moment are under the joint venture arrangement. So by the time the NNPC does need to expend cash to develop assets, to be able to generate, get more oil and all of that, you would have problems getting money from the federal government because all of this revenue end up going to the federal government, and it cannot even reserve its own profit to be able to do more in terms of generating money, in terms of buying new assets, more useful assets, in terms of being competitive. So I think that's one thing that's going to be different. And the enactment of the Petroleum Industry Act, which means that the NNPC has to, or requires that the NNPC runs as a proper commercial entity, like any limited liability company. Of course, there are certain rules, like it has to reserve 20% of the profit or retain 20% of its profit. And that's very important because it then means that when the opportunity comes to buy assets, to compete, to buy more lucrative assets, it can then buy, sell, or go to the capital market or go to the money market to generate more money. Unlike a situation where there were several issues around the World Bank next pledge and issues around legislation that hampered its powers because it was regarded as a corporation of the federal government or an agency of the federal government. Those laws would no longer, many of those laws would no longer hinder or hamper its ability to perform as it should be. Of course, the only challenge may be whether its owners, which will still be the federal government in Nigeria, reduce political interference. That's the only thing or only challenge you may have if that's not reduced.
Okay, so with this proposed investment there by a Frexim Bank, would you say the oil and gas sector is now becoming more attractive?
Well, I think for now it's a commitment. I'm not sure the cash is out yet. It's a commitment.
Yeah, it's not
and
out
it
yet.
could be whether it's more attractive. it's not so much, okay, I'll speak to the attractiveness of the oil and gas industry. It's more about whether the investors think they can generate enough compared to, because oil and gas is international, compared to other places like Guyana, where you see a lot of activities, upstream activities now, is whether you think that apart from generating sufficiently, there's certainty. I would say more the PIA than even that loan make the oil and gas industry, particularly upstream, more attractive. Because every investor would rather bad laws for certainty than uncertainty. So for a long time, some of the risk capital that could have been invested was not invested because no one was certain as to what government was doing in relation to the Petroleum Industry Act. They weren't sure what the terms would be. But now we have a Petroleum Industry Act, and people are fairly certain that for a long time, you know what the legal and regulatory regime consists of. Unlike a situation where, people would rather, investors would rather bad laws that they can walk around than uncertainty of laws. So it's one, whether they can generate or monetize their assets. Two, whether there's certainty. And three, also, enforcement of their rights. International arbitration, is it available? So it's less of even that sort of money by the NNPC. And that's more for the NNPC anyway. It makes the NNPC more competitive, does not necessarily impact the attractiveness of the industry as a whole. Other issues such as certainty, ability to monetize your investment, ability to enforce your rights, ownership rights are more important. And issues around whether the government is one that is known to expropriate. If the government is not one that is known to expropriate, it can then make the upstream, particularly the oil and gas industry, generally more attractive. So I think those are the factors more than the cash to the NNPC.
Yes. And getting investments in that sector is quite difficult. Nowadays with IOCs divesting, can we expect more investments like this? Like the one we have with Afreximbank coming.
Okay. Yes. Okay. So I say that it's an opportunity for the juniors and independents as international oil corporations divest. It means that at some point, years back, indigenous production was about 9% of the entire production in Nigeria. But that has almost doubled now, if not up to 20, 22, 25%. Because in the past it was mostly IOCs. But the opportunity to one reason is that many of the IOCs are beginning to go clean energy. Many of them are beginning to say, you know what, let's reduce our exploitation of dirty oil. That's crude. And let's concentrate more on gas to an extent and mostly renewables. You see some of these companies that are beginning to change their names from exploration and production companies to energy. You see, at the end of the day, they say whatever energy, unlike XYZ Exploration and Production Limited, it becomes energy. So a number of them, because of that reason, are divesting, and then it means that there's opportunity for juniors and for independents. You are aware Shell is looking to divest some of his interests. And I know those companies that have been shortlisted, 4 or 5 of those companies that have been shortlisted, and I did advise on that process. My firm did advise on that process. So I understand that it's an opportunity for juniors, that's the truth, and indigenous exploration and production companies. So it's the issues around clean energy, net zero, decarbonization that's making some of these guys divest. But you need to be creative, like you did say. It's more difficult to get funding for particularly crude. You need to look at environmental issues, equator principles. Everyone's talking about ESG now. Those are critical points you need to take into consideration. And you need to be creative. What creative means the NNPC and a number of independents and juniors have used is forward sale arrangement with some form of hybrid and sweeteners in the mix. So you just need to be more creative to be able to get more money, to be able to get more investment, unlike what you had before, where you had plain vanilla financing. It's creativity, and it's ensuring that you meet the minimum internationally accepted environmental principles or standards. I think for
Right.
natural gas, we continue to receive a lot of investment. It will be issues around crude, but both crude and natural gas are going to be with us for a long time. Even the EIA has said that. Even guys pushing for net zero have said that it's clear. See, crude prices are rising. You've been wondering if everyone's looking to face it out. Why are crude prices rising? Why is gas price rising? And recall Nigeria cooking gas prices doubled last year because of international issues around refining and all of those, and the challenges in Europe, the cold weather, the challenges around COVID before people could get back to work. So I think hydrocarbons are going to be with us for a long time.
All right, and
there'll be financing. Thank you.
Yeah, talking about cleaner energy. From your view, where are we with investment in cleaner energy right now? And do you think there are plans to mobilize such investment?
Okay, very good point. Our transition energy is gas. Nigeria is a gas province. I mean, you often hear that said. We are more of a gas province than an oil and gas country. Than an oil country. We have more gas. I think the last I checked, about 203 trillion cubic feet of gas is what we have. So our transition fuel is gas, and it's much cleaner and it's more thermal efficient than crude. So that's what government is doing. And there's a lot of investment around that. There's a lot government is doing, like gas for vehicles, at some point, and government have been advising on some of these, advising particularly private sector participants. There is the monetization of flare gas that government is working on. So that companies can go to flare points and take that gas and then use it for midstream and other activities. So the truth is that government is doing a lot with respect to policy and trying to implement those policies to ensure that we can monetize gas. More people can be involved in the gas sector. And a lot of emphasis was placed on gas in the Petroleum Industry Act, midstream and downstream gas. So I think we are going gradually, and you're already, we have the Clean Energy Act, and the commitment at COP26 by the current administration for net zero and all of that by 20.
About 2050.
No, ours is 60, I think.
Ours is 60 then. Okay, yes, exactly.
Yes, 2060.
Okay. All right. We'll keep, tracking our investments going to that, because at some point we have to, mobilize more into clean energy to save our planet. All right, Mr. Oni, thank you so much for coming on the program. Dr. Ayodele Oni, energy partner, Bloomfield Law Practice. It was great having you on this Monday morning.
Thank you very much for having me. I do appreciate it.
Thank you. All right, after the break is earnings seasons. I will drill down on some 2021 full-year results. That's the moment. Just stay with us. Welcome back. Now to our next conversation. It's that time again when companies release their scorecards. We see strong earning performance of a number of 2021 company results that released on Friday. Now to drill down on these numbers, we have Ayode Jebo, Head Retail Investment, Chapel Hill, Denham. Great to have you on the program. Good morning.
Good morning, Ladi. Thanks for having me.
Yeah, so we've seen a flurry of full year 2021 company results, published on the NGX. Can we say the compliance level has increased?
Okay, good question. I think the first thing we need to note is that I think last year or 2 years ago, there was a new rule that was introduced that gave companies the option to either publish their unaudited accounts 30 days after the full year and publish the audited 90 days after the full year, or you publish your audited account 60 days after the full year. So what we've been seeing, a lot of the accounts that have been published so far are companies trying to meet up with the 30 days window for the unaudited accounts, which we also call management accounts. And in terms of the reliance level 2 will not be as significant as the audited account. While we don't expect any significant variation from what has been published, uh, that's the unaudited account that has been published compared to the final audited account that will be released within the next 60 days for those that are published within these 30 days. So we believe that when you see the compliance level, it's really very positive for the market. It means that it reduces the time, at least by, let's say, by a month, uh, uh, from when last we've seen the third quarter results. So it helps investors to make informed decisions. And by and large, like you rightly mentioned, it's been a mixed bag. We've seen a lot of very surprising, very positive earnings across different sectors.
Yeah, quite impressive. Going specifically now, the banking sector, what's the trend that, characterized the results in these sectors? Do you expect this trend to actually, hold across the sector?
Okay, thank you. The banking sector, which accounts for close to 40 or 50% of total activity in the equities market, based on its liquidity. And starting with those that I think published very positive results because it's mixed. We saw some that were disappointing too. So starting with EcoBank Transnational, we saw the top line improving by about 13% year on year to about 952 billion. And you also, when you look at the bottom line, which is the PAT, profit after tax, that surged by a whopping 324% year on year to about 143 billion. We can see that impact. I think year to date, the share price have rallied by close to 30 to 40%. And looking critically at that result, while we see the result improve year on year across board, both interest expense and also the fees and commission. We also note that last year there was a goodwill impairment, which is about 62 billion that was provided. That weighed down the PAT of the company last year, and that is responsible for that major boost that we can see this year. Speaking to Fidelity Bank, we can see that their gross earnings too was up, I think by about 20% to about 250 billion naira, and the PAT for Fidelity, I think on a year-on-year basis, increased by about 43% to about 38 billion. We can also see investors are also trying to take position in those stocks. Sterling Bank was a bit fair in terms of the growth was still positive. Gross earnings was up by about 8% to about 149 billion, while PAT was up by about 15% to about 13 billion. So by and large, those are the positive ones. I'm now looking at, I think, the negative, those that were not, if I put it this way, not impressive. Stanbic Bank also published, we saw the gross earnings decline by about 12% year on year to about 205 billion, while PAT declined by about 31 billion year on year to about 56 billion. We saw this is not a surprise because the Q3 earnings too was also not positive, and we believe that there's, in terms of the non-interest income revenue, the bank will need to work on that. That's part of what has been stabilizing the earnings of the bank. And lastly, Unity Bank declared a loss. There was a major provisions on impairments on the financial assets that weighed down on the bank. So by and large, that's it for the banks. We have a very positive results, and
Yeah.
those were also very underwhelming
Do you think investors will be forgiving, the stocks of those ones that didn't perform well?
For investors are rational. So what you would see is that investors will move from stocks that that published disappointing results. They move for those that have potential. That's why I highlighted ETI. It was a major surprise, and we could see investors trying to position into the company because on a EPS basis, that increased significantly to about, I think, 43 naira, if I'm not mixing that up. So investors will definitely gravitate where there's value.
Value, exactly. Well, let's look at the oil and gas space now. Let me have your thoughts on Total Energy. Quite impressive results there.
Yes, very interesting result. And when you look at the top line, that also increased by about 67%. That's to about 341 billion. And the PAT increased by about 700% to about 16.7 billion. And one of the major reasons for that, I try to look at the breakdown. So you would discover that there's an improvement in their sales to corporates. So it means that this their e-card is really helping. And we may also want to say last year a lot of companies were also not operating, and that also impacted on the sales. Their distribution to the network, which is the filling stations, that I think was accounts for about 57% of their total revenue. And while aviation has continued to remain with I think about 10%. So I think by and large the company, we all know that has transformed from exploration to energy. So their focus is also trying to see how they want to take advantage of the renewable energy space, which we feel that there's also a lot of opportunities there. So the future we feel is also bright for this company. Now we'll see investors continue to take position ahead in this company.
All right, on the consumer goods counter now, we also noticed strong, positive growth in their results. What's responsible for that? Can we say the economy is improving?
Yeah, I think we can say the economy is improving because in terms of business activity, has also improved. If we look at where we're coming from, how COVID has impacted activities, people working from home, and also not working on full scale basis. So we can see that driving the earnings of the company. So the two top companies within that space, Boa Food that just got listed with the revenue improved by about 73% to about 333 billion, while PAT improved by about 99%, very impressive, to about 75 billion. In terms of margin, gross margin was around 46% and PAT margin about 35%. Then when you now compare that to flour mills, flour mills, yes, was very impressive. Looking at it, top line increased by about 48%. But you also look at the bottom line, that increased just by about 9%. Because I know investors have been trying to juxtapose in terms of in terms of the value. So when you look at their share price, the Boa Food is around, I think, 64 naira, and I think flour mills still around 20 or 25 25 naira. So one thing that that stood out here is in terms of the margin. So you see flour mills, cost of sales is accounts for about 90% of total revenue. So the company still needs to work on its efficiency, because at the end of the day, for equity holders, is what is left that they're able to pay out as part of it as dividend. So we feel that if this trend persists, we would see more interest in Boa Food compared to flour mills, given the ability to pay to compensate investors or to pay out good dividend.
All right, now to the agriculture space. I see Presco published very impressive results there. Tell me about that one.
Okay, thanks. The sector has been very positive, and I feel part of what is responsible for that is as a result of the FX liquidity, we've seen the demand internally for that domestic demand for their products, which serves as input to a lot of companies. So Presco increased on a year-on-year basis revenue by 104% to about 47 billion, and PAT improved by about 140% to about 24 billion. And you look at Okomu Oil, also increased the revenue by about 57% to about 37 billion. And the PAT increased significantly by 100% to about 14 billion. So looking at, I think, Presco, you would see that you would discover that there's significant improvement in also their exports. looking at the total revenue from their export grew from 1 billion last year to about 5 billion. So when you look at the exchange rate gains that they would also have as a result of the adjustments and that we had last year, that's also very positive for them. So I think that sector, it's the FX environment, it's positioning it for a lot of interest, because rather than companies trying to queue for FX and trying to import, I think it's easier for them to just sign off-take agreement with some of these companies. And it further protracts that sector, if it's properly run, there's a lot of potential, because when you look at their margin, it's really above 50%, very impressive within that space, notwithstanding a lot of the crowdfunding agri space that have really disappointed investors in the past 1 or 2 years.
All right, another big one is the telecoms. You see, MTN had impressive results and actually declared dividends. Also, chatter about Google investing in Airtel India.
Okay, thanks. The sector which we expect would continue to perform positively. When you check the average revenue per user for customers, that's looking at MTN, that also improved to about 4,000 naira from 1,000, maybe 380 naira. So it means subscribers are spending more on data, whether data or on calls rather. So we believe that the companies within that space are really positioned to benefit from that. Their data revenue has continued to improve. When you look at for MTN, revenue improved by, I think, about 48% to about 800 and about 23% rather, to about 1.6 trillion naira in terms of revenue, and PAT improved about 45% to about 298 billion. So we know that MTN did a public offer last year, and we investors, it provides a bit of or it provides strong confidence for investors that have positioned, though the allotment has not been concluded, but that provides a lot of comfort for investors that they have purchased or they have invested in value stocks. And you mentioned Airtel Africa that joined the FTSE 100. I think it's also positive. It's a bit of visibility for the company, and we'll begin to also see demand. When you look at it in terms of the interest that we have continued to see, because of its fungibility, we see a lot of investors trying to use that to also move funds out of the country. So you buy you buy on the on the NGX exchange, and you sell on the London Stock Exchange. So we believe that will continue to see that. And in terms of expectation for their revenue, their end of year is not December, but we believe that that will also be very positive. So by and large, it's been an interesting period within the equities market, and we believe that investors will react positively to this, because we have more positive results, despite that it's a volatile year, pre-election year, but we believe that this first quarter will be strong. But investors that are short-term in nature should try to exit or try to reduce the exposure to the market, because the expectation will reduce as we go into the second quarter. But if you have that long-term perspective in the market, it still presents significant opportunities. While we expect that within the next 1-2 years, when election is over, we understand policies, we believe that some of these companies will be able to deliver more impressive results.
All right, well, we'll be watching as the results keep pouring. Thank you so much, Mr. Ayodele, Head Retail Investment at Chapel Hill, Dedham. Thank you for your time on the show.
Always my pleasure. Thanks for having me.
All right, now, time for an opening call to the market. We have Ini right there on the other side.
Yes, on the other side today, Laddie. Good morning. Good morning, to see you from this other side.
From that end, yeah.
Yeah, and I see a lot of interest in Airtel, like you were asking Mr. Ebo there about the interest to buy Google to buy into Airtel. I wonder what's bringing all this attraction.
It's quite interesting. Airtel India, Google looking, maybe because the CEO is from India, who knows?
Yeah, but we do know even in Nigeria last week, I remember a day or two, Airtel actually lifted the market. They had 10% up.
Listing on the FTSE 100. That's another big one there for Airtel. I'm sure investors love it.
Well, let's see what's happening at the other markets, and then we'll be back to equities. So for the week ended the 28th of January, let's see how trading was at the FX market. There was actually, the bottom line is it ended in the negative, more than 19%. FX spots went down by 21.46%, valued at 472.02 million pounds. There were other forwards was also that. I think the only positive here was the futures. The futures was the only one, 167.50 week-on-week change. That is from the previous week. That's the 21st of January to the 28th of January. And then the FX derivatives also was in the negatives. And then when we look at the value of Naira, we see that for the weekend at the 28th in NAFEX, even here in the INE, we see that there was a reduction in the value, 21.46, that's in the value of transactions, 472.02. Well, we have Akpewe Oputu, fixed income dealer with Access Bank, now joining us to help us understand how the market went last week and what should be our expectation this week. Good morning, Akpewe. Good to have you on the show.
Good morning. Thank you for having us on the show.
Great. So give us an idea. We're looking at the figures here. We see that in the FX turnover week ended the 28th of January, it ended in the red, less than 19%. What actually happened? What drove this?
Okay, so from the data we have published by the FMDQ on their portal, so month on month, we noticed a decline in inflows from the FPI. So compared to what the FPIs have taken out from the month of January, we've taken out about $137 million from the system. And while the inflows that have come into the market recently is about $108 million, we continue to see that the CBN tries to reprice the rates in the market, and the CBN has been the major source of inflows coming into that market, and we've seen a reduction in the foreign reserve recently because the CBN has tried as much as possible to continue to pump in funds into the market to try and stabilize the Naira. Week on week, we saw the INE window, the rates come down to about 417 or 416 in the market last week.
Yeah, so you talked about the inflow and outflow of the FDI. Apparently, this is in the face of a lot of interventions by the CBN. Is that something we're missing? Is there a way to get more inflow than outflow when we talk about, the FX and the FDIs?
So a lot of things boils down to the country as a whole. We are trying to do so much to see that we grow in terms of our exports to try and attract more inflows into the system. Most of these funds the FPIs are repatriating are actually loans they have taken from other countries and syndications which they are paying down on. So they're actually obligations that are due. So for us to encourage more inflows into the country, we have to do more as a country to see flows coming to the system. And with the stability that we see in the exchange rate, that would actually encourage the foreign investors to bring in more money.
You are deep in the system. I'm just curious, the impact of the SDR, of the Eurobond, are we done with the benefit of those?
I didn't get the question quite right.
The SDR that we got last year, and then and then we did the Eurobond that was hugely successful. We got even more than. Are the impacts, have they waned off the market?
Okay, so yeah, so we have those country Eurobond we issued around 6% level. It actually attracted a lot of foreign investors into the fund. So like I told you, they've done some, so these foreign direct investors, they take this fund at reduced rates from their syndicates in other countries. So you get the funds at from as low as 3% and you invest it into Nigeria, which is the developing economy. So they're actually making returns from this funds. And the government is doing a lot. Most of those funds are used for capital projects here in the country. So the country is actually in need of more foreign direct investment, more inflows coming into the country.
Just before we let you go, Akwewe, do you see any change in the scenario for this week? Just quickly.
No, okay, so we continue to see paucity of funds in the FX market. The CBN, who is the biggest supplier and intervention into the market, we expect to see that the CBN will continue to intervene for the FPIs. It happens every Monday and Wednesday, so we expect one to happen today. And also they intervene for the SME and invisible space as well. So just try and see how to encourage foreign investors to bring in more flows into the market.
All right, so we'll keep preaching the gospel, but I hope we can diversify and actually attract this foreign investment. Thank you so much, Akwewe Oputu, fixed income dealer with Access Bank. Thank you for joining us on the show. Enjoy the rest of your day. We'll take a break now. When we come back, we have more markets for you. Still on Business Morning. Join us again. Welcome back. Of course, you're still watching Business Morning and you're still on the market segment. So let's see what's happening in other market now. At the FGM bonds last week, we saw a total of 21 deals there, valued at 7.70 billion naira. The most favored was the 18th of April 2037. Well, we're talking about people looking out for investments, and the next after that was the 23rd of February 2028. And the Treasury bills are just two, not very active there, I must say. But both of them, this is for this year. This is going to mature this year in May. So you would expect a lot of activities there. It's just in a couple of months. And then next year, about a year from now, 26th of January, also just one, but both of them valued at 3.01 billion naira. CBN bills had a total of 9 deals valued at 2.92 billion naira. And the most favored there was, you know, the May. I told you, when the closer it gets to when it matures, the more people just want to cash in and get profit from there. So the 30th of May 2022 was the most favored there. That was for Friday at 2 billion naira. In fact, all of them are for this year, February, next month, and then March. Those were the most favored or active for Friday. 9 deals in all. Let's go to the open market. In the open market, we see a total of value of 67.87 billion naira. 21 deals there for 21 deals valued at 67.87 billion naira there, and a lot of eyes on February 15th. I'm sure if you can get your hands on that, you also want to make the most of that because you soon get, you know, the returns for your investment. 10 deals there for Friday, making this. And then let's go over to, well, my most favored market, forgive me. The All-Share Index was up. It was a green week last week, 0.55%. Equities cap was also up, and 24.89. At a point last week, it got to 25, and then it came back to this. So we'll see what this week holds. And in the activity charts here, just the value was in the green, a total of over 25,000 deals last week, volume 1.44 billion, and then the value was 19.08. The sector, banking has really been doing so well. I think GT Core was really favored last week. Obviously, the banking sector ended in the green. Following that, 4.84%, almost 5% up for the week. Consumer goods also did well. 2.04. Industrial goods, wow, in the green, in the red, I beg your pardon. And then insurance, I think for some weeks now, insurance have been receiving some bashing. Investors maybe should have mercy on insurance for this week. And then oil and gas, the sector that Ladi just spoke about some minutes ago. Go to the NASD market now. It was also a positive trade at the close of the week, 0.17 up. Market cap was 631.55 billion naira, and volume 46 deals valued at 115.13 million naira. And I think that's how much we can take in the market for this segment. Ladi, over to you. I know you have another market there.
Yeah, I have another market. And you know, anyway, we're entering the month of love, and the color is red. So I don't know. What are you expecting for February? Is it going to be
Ladi, let's have this conversation tomorrow.
Okay.
Let me go and check with my crystal ball. Yeah, and see what's going to happen. I'm going to tell you what is going to happen in the Binance market too.
Exactly. I have a lot of respect for your crystal ball. Thank you so much, Ini.
Thank you.
All right, let's look at what's happening in the crypto market there. We see the market cap there, $1.67 trillion, down about 3.60%. The weekend wasn't so bad, but we're seeing a pullback on Monday today. Volume traded at $81.37 billion, up about 39.33%. Bitcoin dominance, 42.09%. Price of Bitcoin this morning, you see $36,947 is down about 3.14%. We see Bitcoin struggled to clear the 38,800 resistance zone against the US dollar. We see Bitcoin moving lower and might decline below the 35,000 support level. We see Ethereum there, $2,506, down about 4.06%. And volume traded, $10.42 billion. Let's bring in Olumide Additional now, a financial market analyst. Hello, Olumide. Good morning.
Yeah, hello, Ladi. Good morning.
Good morning. Happy Pullback Monday, I call it.
Yeah, it's a very boring crypto Monday.
Quite boring, quite boring.
Yeah.
Well, I see Facebook, now known as Meta, they ended their DM dream. Are they done with crypto?
No, they're not giving up on crypto yet. But you need to understand that, regulation around stable coins and the fact that the U.S. Congress were a bit pessimistic about the fact of Facebook having a market share of about 2 billion users coming to the crypto industry would really dampen the U.S. dollar upside. So it was something that was more of a patriotic than a technology move, killing that project. But we already see that Facebook has already evolved towards the metaverse industry, already changing their names and already setting up more players into the project. You could take the like of Oculus, for example, VR reality. They're already getting more exposure in augmented reality, already investing more into that and moving away from the social media parameters because they are seeing the future in Meta. And also, if you look at Google, for example, so Google, a $1 trillion value company, is already investing also in crypto systems, blockchain solutions on Google Cloud. They had a relationship with Coinbase, come back last year on Google Pay. So I think the narrative around the market is very exciting. But, this week is going to be a bit very draggy because there's massive holiday in Asia, Lunar New Year holiday. So I think trading volumes will be down between 20 to 30%, depending on how the market goes about it. But interesting numbers from U.S. economy on Friday would really direct the market in the near term.
Exactly. But, talking about altcoins now, what coins do you see actually, staying up, with this volatile market we have right now?
Yeah, the same narrative. The coins that have exposure to NFTs, coins that have strong DCT cases, we are seeing the likes of Ethereum, we are seeing the likes of Cosmos, we are seeing the likes of Luna gaining momentum, and that's because of we are seeing more developers building on that ecosystem. But you see, the caution here is that Bitcoin seems to be the barometer of the crypto market. So whatever happens to Bitcoin, no matter how we see the upside in altcoin, it seems to be limited.
All right, and we're going into the Lovers Month. I was just talking to Ini right now, and the color for that month is red. What are you expecting for February?
Well, it's very tricky. If each general was red, I would be expecting pink. That means slightly bearish because the narrative is still strong. We're expecting interest rates coming March, so investors will be a bit cautious. But I think with the mainstream players coming on board, the crypto market will be supported. So I don't see any downside below 1.5 trillion in the month of April.
All right, Lumide, thank you so much. Always good to talk to you.
Yeah, thank you, man.
All right, let's look at the top alts by market cap. We see it's mostly red on that count. We see BNB there, $369, down about 4.17%. Cardano, $1.02. Looks like it wants to break that $1 support there. It's down 5.01%. Solana, below $100 right now, $90.01. Top 5 gainers, we see ANKR there leading the gainers chart. Is up 3.54% at 7 cents. And you see MakerDAO there, $1,993. Top 5 losers, we see double-digit losses there. It's Luna down 13.01%. Cadena also down 12%. Cadena has had a good run, but having major pullbacks at this time. I see Theta there down 11.20%. All right, that's all on the crypto market. And that's all on the show this morning. Thank you so much for watching. Do remember to join us at 1:30 on Business Incorporated for more updates and developments in the world of business. Thank you so much for watching. I'm Ladi Williams. Bye for now.